Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 17th of July. Starting off with the FTSE 100, which seems to be trying to roll over, so far getting blocked by this June resistance line at 74.80. Need an end-of-day close above that, and ideally we stay above the late June support at 74.01 to then head higher towards the 50 and 200-day moving averages around 75.70. Otherwise, there's a risk, albeit a small one, that an end-of-day close back below 7400 could lead down to retesting post-March support for this market, which is towards 7200. Still rather worrying that the RSI is below neutral 50. We've been below it for the best part of 3 months now, which is rather embarrassing, and it does obviously suggest that there's not great sentiment around here, but above the neutral 50 level tends to be a bullish market. Moving on to the DAX, which is, I'm sure the RSI here is above 50. Yes, it is. It's 53. So broken the 50-day line and broken that line of resistance from June above the 50-day moving average, 15,900. We're still looking for a break of May-June resistance at 16,300 plus. Best case scenario is that we head up to the top of that rising trend channel from last August as soon as the end of this August, at the end of next month. On the downside, worst that we see at the moment is 15,500, basically July support on the floor of that rising trend channel. Moving on to the Dow, which has all of a sudden become the star pupil amongst the big three indices that we look at. The reason for saying that is that we're basically up at 1 year highs and 1 year resistance. And the longer we stay above 34,500, the greater the chance of a move to the top of that rising March trend channel, 35,100. Best case scenario here is that maybe over the next couple of months we head up to 37,000 at the top of that August rising trend channel. But obviously that might be off the back of inflation dying out or interest rates starting to go down. At the moment it seems a little bit far away. On the downside, the 50-day line, which has been support in June and July to date, 33,600, looks like the worst that we'll see on the any sell-offs. Moving on to Bitcoin, which has been marooned in its recent range for quite some time. The range 29,500 to 32,000, looking for at least an end-of-day close through 31,000 to suggest that this market is ready to deliver a new leg to the upside, up to as high as 36,000 by the end of next month. On the downside, below 29,500, looking for 28,700, but not really less than that, given the way that both the 50 and 200-day lines are rising, still managing to stay above neutral 50 on the RSI. On to the stocks, and it's always a bonus to be able to look at Amigo, given the fundamental position of the company, or the alleged fundamental position of the company. What's interesting here is that we had an unfilled gap to the upside. We've remained above the top of that gap around 0.4, and dips for support since the early part of June have all come in above the 50-day moving average, which is currently rising. So in other words, if this wasn't Amigo, one didn't know what the stock was, one would be looking for a big move to the upside, probably as high as the top of that rising trend channel from March up to 1.5. So very interesting. The clash between the fundamentals and the technicals. Is also an uptrend line in the RSI window. So really, this stock has got almost everything going on apart from a break of that resistance line there from March around a penny, which is the first target, and then up to 1.5, maybe by the end of next month. But as I said, that is only a technical view, not the fundamental situation. On to a stock which has tried to rehabilitate itself in the recent past, Bushveld Minerals, and it looks like it might be third or fourth time lucky in terms of breaking that March resistance line. That's around 3.6 pence. An end-of-day close or a weekly close above that could take the shares back up to the 200-day moving average level at 4.5 pence. Best case, maybe by the end of next month, if we clear 3.6 quickly up to 5.5 pence and March resistance. The turnaround here in place while we hold above recent support around the 3 pence level. On to Cleantech Lithium, which came up with a wonderful resource upgrade today, and obviously the market has given it a 7.89% rise so far, which is probably about right given the current sentiment in the market. Even if the resource had doubled, probably the shares would only be up to 45 or 50 pence at best, but we have gapped up, and there has been a bear trap gap reversal from below the June support there, 38 3/4. So while we're above that, looking for at least a return to June resistance around the 51, 52 pence level, hopefully over the next couple of weeks. This stage, early and end of day close back below the July support so far, 35.5 would really question the recovery here, and we're just waiting for the RSI now at 49 to break back above the neutral 50 level as well. So hopefully we'll see that during the week. On to a stock which is also trying to turn around at the moment, East Imperial. Here it looks like we've got a triangle base after all the pain that the bulls have taken over the recent past. That would suggest that 1.2 pence is the destination, even if we then fail after that. If we could break 1.2, the target there would actually be up towards the 200-day line at 2 pence. So maybe worth keeping an eye on that, especially if we can get above the 50-day line around current levels on an end-of-day close basis. Moving on to Empire Metals, where surprisingly the market seems to finally be cottoning on to the magnitude of what the company is sitting on. We've been looking for 3.5 pence for quite some time. In fact, we were looking for that even before the dip down towards 1.5 pence, but unfilled gap to the upside at the beginning of the month, and another gap today. So hopefully 3.5 in the bag over the course of the next week or two. If we can get through 3.5, then there is a new level to shoot for, and that will be the line of resistance that I'm just drawing at the moment. That's heading for 4.3 pence, and while we're above the 2.5 pence area, looking for that hopefully by the end of next month. On to a company which perhaps some people are follow very closely, Futura Medical. Here we've had a second gap to the upside in the recent past. First was last month, now another one this month, but hitting that line of resistance, the top of that channel there from this time last year at 61 pence. So at the moment, everything hinging on an end of day close above 61 pence, but Futura leading the shares up to 75 pence. Maybe we'll get that by the end of next month. The alternative is to look for a buy the dip at the 50-day line at 50 pence. But there is an uptrend line in the RSI window from March. Maybe that will push the shares through 61 pence over the course of the rest of this week. Moving along to a stock which looks as though it's starting to build a base after a rather rocky ride. Nice action here for global petroleum, either side of the 50-day line. That's around 0.17. Above that, we're looking for the shares to hit the top of a rising trend channel from back in April, as high as 0.27, maybe as soon as the end of next month. And ideally, there's no breakback, obviously, below the recent support there, 0.15 for the shares. So potential turnaround there for global petroleum over the near term. Covered Galileo yesterday, and it's good to see that the shares are now up 17.5%, so that's a job well done. We're through the 50-day line, heading towards the 200-day moving average at 1.25, and the best case scenario over the near term, maybe the next week or two, up to as high as 1.4 pence. If you're a fan of the shares and looking for greater glories, then I can give you a potential target for the end of the summer, maybe up towards the line that I've just drawn now, which would be the upper parallel or the top of the triangle there from last August. That's currently heading as high as 2.1 pence. So a break of 1.4 could give 2.1 pence for Galileo. And the ideal scenario is we stay above the 50-day line at 1.1 pence in the meantime. Onto a stock which has not been an easy ride by any stretch of the imagination, Guild Sports, but here also giving the impression of slight sort of nibbling by the bulls. Unfilled gap to the upside today through the 50-day moving average at 0.69, and above that we're looking for the shares to fill the gap up to as high as 1.02 pence by the end of next month. In fact, the best case scenario here would be up to 1.2 or 1.3 pence over the next couple of months. So let's see if Guild can come up with that unlikely scenario while it remains above the low 0.6s. On to Marechale, which I have been covering of late. Here it's also responding to the charting with a little push to the upside. Resistance line there around 2.2 pence, end of day close above 2.2, and we could go up to 3.2 pence as soon as the end of next month. The sizzle here is the way that there was an unfilled gap to the upside at the end of last month, and we've never filled the floor of that gap, which is a decent signal, as is the uptrend line in the RSI window and the rising 50-day moving average. Stock which is looking encouraging in terms of recovery as well is Oxford Cannabinoid, and here we've had an unfilled gap to the upside through the rising 200-day moving average. As long as we hold above recent support at 0.8, looking for the shares to zigzag up to as high as 1.6 pence over the next couple of months. If you're cautious, maybe wait for an end-of-day close through the 50-day line at 1.05, but the gap today does suggest that we have done enough, especially given that we bounced higher than we did back in February above 0.8 pence. Onto a stock which doesn't get much coverage either here or anywhere else, One Heritage, but again, rising trend channel from, in this case, back in October, top of the channel heading for 26 pence. Maybe we could see that by the end of next month while we remain above the 50-day line area around 16 pence. And that should then take the shares back to where they were basically last summer. Onto the stock which is probably, there's never a dull moment here actually with Predator. Here we've had the V-shaped dip for the shares after the unfilled gap to the upside, which started the rally back in June. Golden cross as well, so very volatile, but the charting generally working well, and now we're looking for a target here as high as 18.5 pence, which is the steeper resistance line there from this time last year. Hopefully we'll get that over the next week or two. If you are a fan of the shares and think that 18 pence is just not quite enough, then possibly the best case scenario here at the moment would be a move towards 26 pence at the top of a rising trend channel from back in May, and everything fits together like that. But let's see if we can get to 18 first. But above 18, chance of 26 pence over the following month or so, and ideally we stay now above the 13 pence area should do the trick, given that that was resistance on the way up back in June. Last three now. First one is Rainbow Rare Earths, which came up with some decent news today. We can see that the share's been rising ahead of it, and the expectation was for the stock to follow through because not everyone had the chance to invest before the news. Here we've got a broadening triangle there from this time last year, top of the triangle heading towards 17 or 18 pence, and hopefully we'll see that as soon as the end of this month while we remain above recent support at 12 pence. Onto the stock of the day and the RNS of the day, and probably it'll be one of the RNSs of the year. Amazing that Sovereign Metals is not up higher than it is. People obviously confusing Rio Tinto with Rio, the Duran Duran song, and also Rio Bravo, the film. But here we've got a situation where the shares have gapped up after an extended base on the daily chart since October. The ideal scenario here is that while we're above 25 pence, which is pre-announcement resistance, or 26 pence in fact, we'll head up to as high as 36 pence, hopefully by the end of this month. But what a big story, and what a relatively sort of flat reaction from the market, typical of the way the market is at the moment in the small cap area. Moving on to Xtract Resources as the last stock here today, and the shares making good after the recent announcement regarding Manica. We've got the 50-day moving average now starting to curl up, and that does suggest that hopefully over the next 4 to 6 weeks we'll see the shares back at basically 2023 resistance around 2.4, 2.5 pence, while they remain above 1.5 pence and the 50-day line. That's it from me today. More updates tomorrow.